Hello, and welcome to the LTC Tree Insiders podcast. We're doing a video version today here, and I'm here talking with my colleague Derek Wilkins. How's it going, Derek?
Hey, good, Drew. Good. How are you doing?
Great. What do you want to talk about today? I know we've got a couple topics in mind.
Yeah, what I've been going into is, or hearing a lot is getting a lot of feedback from clients who they're having the concept of long-term care insurance brought up by their financial advisors. And it's just the question, what's the best way, if they're sold on the concept, if they think it's going to happen, there's a shot that they might need long-term care, what's the best way to buy this insurance? And I'm just hearing a lot of feedback where the advisors, typical if it's Edward Jones, Merrill Lynch, their hands usually are tied. They can just recommend like one product.
Right.
And a lot of times the customers have no idea that there's a dozen other options out there. So the topic of this podcast, I want it to be what is the best way to buy long-term care insurance and maybe kind of go from there. So what are your thoughts?
Yeah, I mean, and full disclosure, our whole DNA of our company is helping people compare different options and companies. So, of course, we're going to have our own bias, and that is shopping around and then getting good advice. That's the other thing, and as a financial advisor, there certainly should be part of your decision making process, but are they the best person to suggest the right product for a client?
Yeah, it's just like, when I had my securities license, I didn't do a whole lot of it. So it's just like the financial advisor, they can probably give the client better advice on which mutual fund to buy. But we've been doing this since the 90s, helping people compare these plans. And this is kind of our wheelhouse. So, our method, again, we are kind of biased, but the ability to shop every single product out there and know the pros and cons, because there are cons with all these products, like the back of our hand. That's really the way a lot of our clients like to shop is just side by side compare. Hey, what are the pros? What are the cons? And which one do I want?
Yeah, and in particular, right now, and this is not a new thing, the companies tend to kind of, because they're competing with each other, the companies that might not be offered by your financial advisor, they kind of leapfrog each other sometimes in terms of who's got the best deal. So it's a very time sensitive approach in terms of who has the best overall policy for this client right now, and it's oftentimes usually not what the advisor has access to through his chain of command.
Yeah, and so we kind of coined the phrase online buying process, and we were doing this way before it was cool to do it.
Yeah,
15 years ago, and the reason being is because if you're in the office of your advisor, if you're in the office of the insurance agent, or if he's, God forbid, at your house, at your kitchen table, a lot of times artificial pressure can be put on you, and it's just so negative. And we kind of figured this out. Hey, I wouldn't want to be treated like that. So let's come up with a system to where you can do it at your own time. And we developed our online buying process, which is, we'll have a conversation with our clients. We'll basically take their order, so to speak. We'll FedEx them out some quotes from all the companies. And then when they're ready to talk, they can call us. It's as simple as that.
yeah, and to the FedEx point, typically what we do is we send out multiple companies quotes side by side, and then we fine tune it from there. As the sort of learning process evolves. So the advantage to the consumer is that they get to see competitive quotes from different companies, but also they get uh, a different angle on getting advice as well. Now, this kind of
Yeah.
dovetails in with the hybrids, where I know some financial advisors love the hybrids. Some don't like them because it takes their assets under management number down a little bit. Let's talk about that maybe.
That's a good point. Yeah, yeah, because there are like pros and cons. Some advisors like it, some don't. But yeah, if your husband and wife, it's going to probably take about 200 grand to fund one of these, to fund a couple of these hybrid plans, one for each, and that's taking $200,000 of assets under management out of that financial advisor's pocket. Now, the good advisors, and there are a lot of good ones, they'll
Oh
go
yeah.
ahead and recommend it because it's the right thing to do. But there are some that say, hey, I'm making 1.5% on that 200K, so I'm giving up $3,000 a year of income on that one client. So
Again, those are total outliers. Just
yeah,
something for people to be aware of that,
yeah,
and most advisors are going to be a fiduciary to their client, but not all of them are. So that's another thing to know about your advisor. Are they a fiduciary to you? or are they just, recommending a product for some other reason?
Yeah, and like, we get this all the time. I mean, we've been doing this for, over 23 years. And, I've found that if you're just brutally honest with clients and say, hey, look, if you're in your 40s, 50s, or early 60s, it's honestly not going to matter if you buy it this year or next year. So take your time. And, that's the truth. And so, we have just found that if you just tell people the truth, give them the facts, and then you can also just preface that with, as long as nothing happens to you, which statistically the odds that something's going to happen to a 50-year-old man is pretty low. So ideally, he wants to do it after the mortgage is paid off, the kids are self-sufficient. So the timing is really important, and you want to make sure that you kind of counsel them and figure out what is the exact time, the best time for them, because a lot of people don't know what would be the right time. So it's kind of our job to kind of counsel them. And sometimes it might be 5 years in the future before we're going to get the sale, and that's okay with us.
Yeah, totally okay. At the same time, for most people, assuming that the finances work out, they'll get a better deal by buying it at a younger age. Of course, they'll get a lower premium. But yeah, again, the point is, if it's artificial pressure, if you're feeling like, hey, I need to buy this now because if I wait a year, things are going to go up a lot. That's not true.
Yeah, it just not. Yeah. But yeah, just kind of circling back to one point, and then we can kind of wrap this up. But a lot of the clients are coming to us after having a conversation with their advisor, and they're talking a lot about the hybrid long-term care insurance plans. And that has gone from being 5% of our business to about 60% of our business. So it's the majority of our business now. And for people who have assets probably $500,000 or higher, you definitely want to take a look at the hybrid plans because they could be part of a portfolio. And if you have a husband and wife, a strategy we use sometimes is women file about 70% of the claims. So sometimes we'll just insure the wife with a hybrid because she's statistically more likely to use it, and then roll the dice, self-insure the husband, or maybe the husband gets a traditional plan, which the rates are much lower for men on the traditional plans.
I like that. It's like a hybrid approach. So you've got a traditional
Yeah,
plan, pay a
yeah,
couple grand a year, and then you've got a hybrid plan paid up front or whatever. Yeah,
yeah, yeah.
good idea. Well, okay. So just to wrap it up, we're LTC Tree. We provide comparisons of all the different companies. Like Derek has kind of alluded to, we'll give you some advice. We'll shoot you straight, and check it out. Our website, LTC Tree. We'll put a link in the YouTube description below. And if you have any questions, you can reach out to us on YouTube through a comment or a message.
All right. Thanks for joining. See you, Drew.
All right. See you later, Derek.